Let's jump right in because overnight, a regional conflict has absolutely gone global, and we're just starting to see the shockwaves hit the markets. So let's break down exactly what's going on. All right, here's where we stand. We're on day 4 of this US-Israel operation against Iran, and overnight, things took a major turn. What seemed like a contained situation has now become something way more dangerous. And here it is. This is the headline that has every single trader on edge this morning. Iran has retaliated. But here's the key part. They didn't hit US or Israeli assets directly. Nope. Instead, they hit a Saudi Arabian oil refinery, pulling a huge new player into this mess and striking right at the heart of the world's energy supply. So you can see how this is snowballing, right? What began as a so-called targeted operation is now threatening to explode into a full-blown regional crisis. Let's dig into the key developments overnight that made this thing widen so quickly. Okay, the escalation has been incredibly fast. First off, Saudi Arabia is now right in the middle of it. Then you have President Trump signaling this could go on for 4 weeks or less. That's a way longer timeline than anyone in the market was ready for. The human cost is also climbing, tragically, with 3 U.S. troops killed and American bases now under attack. And to try and calm things down just a little, the U.S. is offering to escort oil tankers, but honestly, traders are holding their breath to see if that even works. So, with all that happening in the background, it's really no surprise that global markets are reacting, and reacting hard. What we're seeing is a classic risk-off move. Investors are dumping stocks, fleeing from all this uncertainty. And you can actually see this fear in the numbers. The VIX, which is basically the market's fear index, it spiked to 25.16. That's the highest it's been since November. This tells you the market isn't just a little nervous, it's actively bracing for a long and messy conflict. But look, this sell-off isn't hitting everyone the same way. Material stocks are getting hammered, down over 3%. Industrials and consumer discretionary aren't far behind. And why them? Well, it's because these are the sectors most sensitive to any kind of disruption in global growth and supply chains. They're on the front lines. All right, let's pivot to where this hits the hardest. Of course, we're talking about oil. A strike on a refinery, that's a direct attack on the world's energy supply itself. And then bam, this news drops. Iran's Revolutionary Guard Corps has confirmed it. The Strait of Hormuz is officially closed. For anyone who doesn't know, this is one of the most critical arteries for energy on the entire planet. And right now, shipping has pretty much ground to a halt. Now, to put that into perspective, so you really get the scale of this, closing this one single strait disrupts 1/5, that's 20% of the entire global oil supply. That is a massive wrench thrown into the works, and it's sending oil prices through the roof. So this all boils down to one huge question, right? The one every single oil trader is trying to answer. Was this refinery attack just a one-and-done retaliation, or is this just the opening act of a much bigger conflict that could paralyze Gulf energy for weeks, maybe even months? The answer to that is going to decide if oil has another 10, even 20% left to run. Okay, so whenever things get scary like this and stocks sell off, money has to go somewhere. Investors are scrambling to find safety. But where is that capital actually flowing in this environment? Well, the answer is getting a little more interesting. So let's compare the old school safe haven with the new kid on the block. On the one hand, you've got gold, the old guard. Yeah, it's up, trading around 51.63, but it's still way below its all-time high. It's getting a bid, for sure, but it's not a panicked rush. Then on the other hand, you have Bitcoin, and this is where it gets fascinating. At $68,000, it's holding up way better than stocks. Analysts are calling this relative strength, and it's definitely turning some heads. Look, this situation is changing literally by the minute. So if you're trying to make sense of the markets today, what should you actually be watching? We've boiled it down to 3 really critical things. First, keep your ears open for any diplomatic signals. Any whisper of back-channel talks from mediators like Oman or Qatar could swing oil prices 3 to 5% in a heartbeat. Second, we need an official update from Saudi Aramco. The market is desperate to know how bad the damage to that refinery really is. And finally, believe it or not, keep an eye on the economic data. The ISM Services report is out this afternoon, and if it comes in hot, it could just add more fuel to the fire, putting even more pressure on stocks. All right, so let's pull it all together. Here's the bottom line right now. The conflict is getting wider, pulling in Saudi Arabia. Stocks are selling off as that fear index climbs. Oil markets are completely on edge, jumping on every single headline.
And in this chaotic search for safety, Bitcoin is proving to be surprisingly resilient.
You know, what we're all watching play out here is a perfect real-time example of a core financial idea, the geopolitical risk premium. It sounds complicated, but it's not. It's just the extra money investors demand to take on the risk that, a war could suddenly blow up their profits. And right now, we are seeing that premium get added to prices across the board. And all of this, it leaves us with the one question that's going to hang over everything for the next few days, maybe even weeks. With markets reacting this hard and this fast, you have to ask yourself, in a world that feels like it's escalating, how much of this risk is already baked into the price, and how much more bad news is still to come?